Hey guys, Jeff Wild. I'm here from the Day Traders Academy, and I want to give you this short video that's going to teach you some kind of tools and tips and strategies to make money off of support and resistance levels. And I want to go over specifically the support resistance levels that I provide on my blog, and I also send out via email. It's free each weekend. And so let's jump right in. Basically, what this means for you is going to help increase the accuracy. Okay, in other words, you're going to have better trade entries, and you're going to reduce your risk because your accuracy goes up. And of course, if your accuracy goes up, you're going to have less losses. So it's always a great situation to be in. And finally, I want to point out is that once you learn this skill set, you can use it from anything from Forex to Bitcoin to indexes and so forth. As long as the chart moves and it's got a pulse, all right, you can trade it and make money. So let's jump right in. The one thing I want to point out is that I want to get this information out to you in a timely manner. And what I mean by that is probably about 3-4 months ago, I did a great video on candlestick trading. Okay, and I put a lot of time into it, a lot of effort. I made all these like really polished, sweet looking slides, but the problem was it took me like 8 hours. So I've really been kind of not looking forward to putting that much time in just to give you guys a great video. But then it really dawned on me that you're not watching my videos to look at, pretty sexy slides. You want to simply learn a better way to trade. So with that said, this video is going to be a little on the ugly side, but it's my sincere desire just to give you information you can use versus, please your eye and just look entertaining. So once again, please forgive the lack of, Hollywood polish on the video. I just want to help you make money. So let's jump right in. What you're looking at is the blue line is where the market closed. In other words, on the Friday, okay, let's say New York time, the market closes. I don't know if it's like 5 or 6, something like that. I'm not sure the exact time. Okay, that's the closing price. The R1 and the R2 mean resistance, and of course the S1, S2 means support. These represent resistance and support levels that I've analyzed going over the charts. I'll look at like 4-hour charts, hourly charts, daily, weekly, and monthly. I'll look for things like major support resistance levels, what I call price clusters. I'll look for congestion. I'll look for certain candle patterns. I'll look for big numbers. I'll look for Fibonacci levels. And I can't take the time to explain the reasoning behind all those now, but just know that when enough of them combine in a particular level, this gives you like a zone where the market will probably either find support or resistance and make a move. And we want to capitalize on these levels. So let's jump right in how you can use those. So basically what happens is the market opens up. So let's say like, it's a Sunday night in New York. I think it's 6 p.m. it opens. Well, the market's going to open up here. You don't know if it's going to go up or down. So you basically have to wait to see what happens. So let's say you're not in a trade. You want to just simply see what's happening. So let's say the market goes down, right? You're anticipating that this could be support in the market and cause a bounce. And sometimes literally what can happen is it can be like, it bounces off, it might do this, right? And then it goes to that one, right? It might go down, okay? It could do something like that, bounce off. Now, of course, not all the time will it bounce off of these levels, but there's enough times where you're going to find trading opportunities. So let's get into this a little bit more. Let me just, okay, there, we got rid of that one. So let me just give you a couple scenarios once again. The market could do something like this, right? And just sell off quickly. It's kind of just, a quick reversal in price. It might do something like this, like a double top, right? It could go a little higher, sell off. That's very common, okay? It could do something like this. Once again, it goes up, right? It might hit a little bit of resistance here, but then it finds support. So that's what they call like a resistance turns to support, and then it can go up. It could do that again if it's a really fast charging market. It could be something like this, right? The same is true to the downside. Let me just get rid of this line here. Okay, so in other words, market can go down, might find a double bottom, go up, right? Or it might go down, quick rejection of that level. In other words, a massive amount of buying came in, and it goes straight up. Okay, the other scenario is it opens up here, right? It could quickly blow through that and then have something like that. That's when there's a lot of selling pressure, right? Then it could do something like that, right? So you never know what it's going to do, but the way you kind of figure out what it will probably do is by anticipating that when you're at one of these support resistance levels that something could happen. And then what you want to do, let me just get rid of these lines again. Let me just scroll down my chart. These are a couple candlestick patterns that I love. This is the doji. Okay, they probably got another name for it. I think it might be called like a graveyard doji or something like that. This I call a spinning top. I don't know if that's the actual name in candlesticks. It really doesn't matter. But the idea is that you want to burn these little patterns into your head, because what they can represent is either consolidation or exhaustion. So in other words, so let me explain here. Let's say the market is climbing up, right? And all of a sudden you get this spinning top. Well, it could mean that the market is going to, it's exhausted here and then it's going to sell off, right? Let me just get rid of that line real quick. Or it kind of went up. You had this candlestick, and then it was like just a bit of congestion. You know, the market's got to take a breather, and then it goes higher. Okay. Same thing can happen. Let's say the market's going down. Well, you get this spinning top here, right? It might be that the market's taking a breather, and then it's going to go lower. Or it might mean that the market is, you know, it's exhausted. It can't go any lower, and then when it does, it bounces higher. Okay, and what can happen is you might find 1, 2, 3, 4, 5 of these bars sitting at, you know, like this R1 or S1, these different support resistance levels. It could be a combination. It might be like 1 or 2 dojis. It could be a couple spinning tops. There might be like 1 doji and a couple other bars that don't fit this criteria. But the main thing to do is let me just get rid of these lines here real quick. So basically, once again, what you want to do is you're sitting there. If you see the market go up, right? You want to wait to see like if you get any of those dojis or those spinning tops. So if you start to see them at the line, maybe you get one here, right? You might get one, and if all of a sudden it breaks below there, right? Breaks below, then it could go lower. So if I see that kind of thing, right? If I see that going sideways at that line, it's what I call straddling. In other words, if the bar can't significantly break above or below the resistance level, it could be a sign of weakness that it's going to go up higher, all right? So you might see, you know, a few of these bars here, right? And then it breaks below. So all you're doing is you're waiting for the market to tip its hand. If it can't go higher, then it can only go lower. It can only break below these. Now, let me just get rid of these real quick. here's another tip to decide if the market is going to go above or below. So once again, if the market is straddling, you know, the candlesticks are kind of can't break above or below. That's one thing. So how do you know when maybe the market is telling you it can't go any higher or any lower? Well, if you get this particular situation, you get a bar candlestick that is completely, the high and the low are completely below that R1 or completely above. Okay, so let's say, you know, the market's going up, I get a couple sideways bars straddling, right? I can be aggressive and short below the low of those candlesticks, or if I want to be conservative, I can wait for a full bar to be below the R1, and then I trade the breakout this way, okay? Same thing, market goes up, right? Let me just get rid of these real quick so I don't confuse you here, right? So the market goes up, you're not sure what to do, right? If you want to be conservative, you're going to wait for either a whole bar below or above. So let's say the market goes up, goes sideways for a few bars. You see like a doji or spinning top or any other bar that's straddling it. You wait for a full bar to be above that. Now, at minimum, I want to see a 5 or a 15-minute bar. Probably a 5 is enough. Just completely above that line. And then, so if I want to be, you know, a little more conservative, I will buy the break of that bar and go up. If I want to be more aggressive, then I can buy, let's say, above the high of the bars that are straddling the line. Okay. And then just real quick, one last example. Let's just say that, you know, market did this. And remember, it's always going to do different things. It can be like messy. It could do like that, right? Then it could do this, right? So now it's finally getting in there. It's the same deal where I'm saying, okay, I have to wait to see what are the bars doing at this support or resistance line. In this particular case, we're at the support level 2. Okay. If it's going sideways, if it's straddling the line, that's telling me something. All right. So if I want to be aggressive, I can short below the bars that are straddling. If I want to be aggressive to the upside, I can go long on a breakout above the high of these bars. I usually give it like, say, 3 or 4 pips. Okay. Now, if I want to be conservative, right? Let me just get rid of these lines real quick. I either wait for full bar below and then I short below that, or I wait if it didn't go below there, right? It did this. I buy the break of that. Alright guys, I want to keep this video short. I thought it was going to take me about 6-7 minutes, but I'm at kind of the 13, almost 14 minute mark. But this stuff happens all the time. Okay, and one last quick little point I want to share with you is that this phenomena about the straddling at like support and resistance levels, you can use that as like a very lethal tool in your kind of trading toolkit when the markets approach like moving averages and stuff like that. So there's many ways you can use it, and I'm actually going to be teaching a workshop that goes into much more detail. I could spend a week on this stuff easy. There's all kinds of cool tactics you can use. But anyway, I hope it gives you some you know, food for thought, and it gives you just something else you can use. So let me know how you like this, and have a great week.